Most teaching shows the clean case, a markdown bottoms, a tidy demand zone forms, price reverses. Real charts often don't cooperate. Today we read one that starts perfectly clean, then breaks down in a chop at the bottom where no zone forms at all. The lesson textbooks skip, sometimes the best read, is recognizing there's no trade here. A bearish order block forms at the early highs, the supply band across the top. Price tops out, distributes, and departs decisively, confirming institutional supply. The zone sits above as the reference for the downside. This is the clean, readable part of the chart, and the contrast with the bottom is the whole point. Price recovers back up to the order block. A higher high taps the underside of the zone. The retest, on weak conviction, and the dormant supply is still live, setting up a rejection. This topside moment is clean, a clear thesis with defined invalidation above the zone. The bottom, where no such clarity ever appears, is the contrast that teaches the lesson. The order block rejects price. The candles roll over into the markdown. Everything so far is textbook, a clean ceiling, a clean rejection, a clean start down. That matters because it sets the expectation the chart resolves cleanly at the bottom too. A clean rejection feels like it should hand off to a clean demand zone. The value of this chart is that it breaks that expectation. The markdown traverses the range, lower, highs and lower, lows stair-stepping down with conviction. Bias firmly down, every bounce capped, the structure clean and readable the whole way. No ambiguity about direction here. And this clean traverse is exactly what makes the breakdown at the bottom so jarring by comparison. The markdown bottoms at a capitulation low on a volume spike, one of the larger bars on the chart. In a clean scenario, this is exactly where demand zone would form. Heavy volume into a low, absorption a buyable base. The volume looks like the signature that should precede a clean zone. A reader trained on textbook examples expects a tidy base and a recovery. What comes next is what happens when that expectation isn't met. After the capitulation, price attempts to base, an initial bounce, some sideways action, the start of what could become a demand zone. At this stage, it's reasonable to watch for one forming, but a reader can't know yet which way it resolves. The discipline is to watch how the structure develops, not assume a clean zone is forming just because capitulation volume printed. Instead of a tidy base, price produces overlapping swings. Highs and lows print at similar levels. Candles overlap heavily. No clear range forms. A clean demand zone has definition. A clear low, a clear reaction, a readable boundary. This base has none, just a smear with no decisive level to anchor to. Overlapping swings are the visual signature of indecision, and the absence of a clean boundary is itself the information. The structure labels tell the story: higher high, higher low, lower high, lower low, all in close succession with no consistent sequence. In a clean trend, the labels form a pattern. Here they alternate without order. When the labels stop forming a sequence and start alternating randomly, that's the definition of chop, no directional bias to read. Any single swing here is noise, not signal. By now it's clear, no decisive demand zone has formed. The base never developed into a clean, buyable level, just oscillation in a band of indecision, no zone holding with conviction. This is the read most content never shows, because it's the absence of a setup, not a setup. A reader who insists on finding one will manufacture it, drawing a zone where there isn't one, and that's the costly read. The correct read is to stand aside. There's no clean setup here, and the highest value decision is recognizing that and waiting. The chop will eventually resolve into a clean zone, a continuation, or a breakout with real structure, and that's when something readable appears. Until the market commits, the disciplined response is no action. It produces nothing visible, but preserves capital and attention for the clean charts that do offer readable structure. 3 things to carry from this chart. Not every markdown ends in a buyable zone. Real charts often bottom in a structureless churn, and forcing the clean template on a chop is a common, costly mistake. Alternating structure labels are the signature of chop. Read the pattern, not any single label. And recognizing the absence of a setup is itself a high-value read. The decision not to act on a messy chart is harder and often more valuable than finding one on a clean chart. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.